On April 22nd, 2019, Kimberly-Clark Corporation reported first quarter earnings for the period ending March 31st, 2019. This video provides an update on the company's dividend safety using its most recent operating results. Before we dig in, I invite you to subscribe to this channel and like this video, which will help more people discover Sure Dividend's investor education efforts. With that out of the way, let's dig into Kimberly-Clark's dividend safety. To begin, let's talk about Kimberly-Clark's business model. Kimberly-Clark is a global consumer products company that operates in 175 countries around the world. The company's key brands include Huggies, Pull-Ups, Kleenex, Scott, and Cottonelle. Kimberly-Clark has a market capitalization of $45 billion, with annual revenues in excess of $18 billion. Kimberly-Clark is one of the world's most popular dividend growth stocks. The company's current dividend yield is nearly 3.1%. Moreover, Kimberly-Clark is a consistent dividend grower. In fact, the company has increased its annual dividend payment for 47 consecutive years. Because of this, Kimberly-Clark qualifies to be a member of the Dividend Aristocrats, an exclusive group of dividend stocks with more than 25 years of consecutive dividend increases. Kimberly-Clark is just 3 years away from becoming a member of the Dividend Kings Index, a group of even more exclusive stocks with 50-plus years of dividend increases. Looking ahead, investors interested in owning Kimberly-Clark stock will likely be interested in the safety of the company's dividend payments. For the remainder of this video, we will discuss Kimberly-Clark's dividend safety from 4 perspectives: its dividend safety in the context of its current earnings, its dividend safety in the context of its current free cash flow, its dividend safety in the context of its recession performance, and its dividend safety in the context of its current debt load. First, let's discuss Kimberly-Clark's dividend safety in the context of the company's current earnings. In the first quarter of fiscal 2019, Kimberly-Clark generated adjusted earnings per share of $1.66, which compared unfavorably to the $1.71 of adjusted earnings per share in the same period a year ago. For context, Kimberly-Clark currently pays a quarterly dividend of $1.03, which implies a payout ratio of 62% in the most recent quarter. Looking out over a longer time horizon, our conclusion is the same. Kimberly-Clark generated $6.61 of adjusted earnings per share in fiscal 2018. The company distributed $4 of common share dividends during the same time period for a dividend payout ratio of 61% in the full fiscal year. Using earnings, Kimberly-Clark's dividend appears very safe for the foreseeable future. Many analysts believe that comparing a company's dividend payments to its free cash flow is a better method for assessing dividend safety. With that in mind, we will now compare Kimberly-Clark's current dividend payment to its free cash flow. Kimberly-Clark generated $317 million of cash flow from operating activities in the first quarter of fiscal 2019, and spent $316 million on capital expenditures during the same time period for free cash flow of approximately $1 million. The company distributed $345 million of common share dividends during the same time period for a free cash flow dividend payout ratio of 345%. Looking out over a longer time horizon, the company's dividend appears to be much safer. Kimberly-Clark generated $3 billion of cash flow from operating activities in fiscal 2018 and spent $877 million on capital expenditures for free cash flow of approximately $2.1 billion. The company distributed $1.4 billion of common share dividends during the same time period for a free cash flow dividend payout ratio of 67%. Using free cash flow for just the first quarter, Kimberly-Clark's dividend could be at risk for a dividend cut. Using the longer-term view of free cash flow, the company's dividend appears to be much safer. We encourage investors to monitor the situation closely moving forward. Companies do not cut their dividends in the good times. Instead, dividends are reduced when companies experience financial difficulties. With that in mind, this section will analyze Kimberly-Clark's current dividend safety in the context of the company's historical recession performance. We believe that the best way to measure a company's recession resiliency is by assessing its earnings per share performance during the financial crisis that occurred between 2007 and 2009. Kimberly-Clark's performance during this time period is shown here. Despite a decline in 2008, Kimberly-Clark produced a 6.4% overall increase in adjusted earnings per share during the last recession. The company did not make a new high in adjusted earnings per share until 2013. More importantly, though, the company's earnings still covered its dividend payment, and Kimberly-Clark continued its multi-decade streak of dividend increases. Because of this, we have little concerns about the company's ability to pay rising dividends during future economic downturns. The last angle that we will use to assess Kimberly-Clark's current dividend safety is by looking at the company's current debt level, which is a cause of concern for many investors. More specifically, we will see how much the company's weighted average interest rate would have to increase before its free cash flow would no longer cover its dividend payment. At the end of the first quarter of fiscal 2019, Kimberly-Clark had $6.8 billion of total debt outstanding. The company generated $65 million in interest expense in the most recent quarter for a weighted average interest rate of 3.8%. Normally, we include an interest rate stress test in these analyses that shows how much Kimberly-Clark's weighted average interest rate would need to increase before its dividend would no longer be covered by free cash flow. Unfortunately, Kimberly-Clark's dividend is already not covered by free cash flows, so we have excluded the stress test from this video. We reiterate that companies should monitor this trend closely moving forward. Thank you for watching today's video, which performed a deep dive on Kimberly-Clark's current dividend safety. We invite you to subscribe to this channel and like this video, which will help more people discover Sure Dividend's investor education efforts. If you're interested in learning more about our systematic approach to dividend growth investing, visit our website at www.suredividend.com.